a good audience that has come in, a topic that everybody wants to hear more about, which is FHA loans,
Hmm.
misconceptions and myths about FHA loans. I did a small survey. Ruben, and we have a bunch of questions that people have submitted
Okay.
about FHA loans. So give me 1 second. And we are a go. So good morning, everybody. My name is Ernesto Vega, broker of Canvas Real Estate. Thank you for joining me once again. My co-host today is no other Ruben Crispino, intergalactic manager for CMG Home Loans. We were able to pull Ruben again from a galaxy far, far away, like we do every Thursday for 30 minutes, to have a quick conversation about FHA loans. And Ruben, if you want to do a quick intro, tell them for people that don't know who you are, what is it that you do, and then I'll start firing away the questions that were submitted in a survey. We did a survey, Ruben, about questions or like misconceptions people had about FHA loans. I wrote them all down, so I'm ready to rapid fire them at you, so you can clear the air for everybody that has those confusions about FHA loans.
Yeah, I'll do the best I can to answer the ones I know. But thank you again. Yes, my name is Ruben Crispino. I'm the regional or intergalactical manager for CMG Home Loans here in Florida. Been in this wonderful real estate mortgage business since 1989. And think I've forgotten more things than I know right now. So, but when Ernesto asked me with the last night of this morning what topic to do, this topic we can do over and over again, just because there still seems to be such misconceptions on FHA loans. So let's get at it. Let me know. How do you want to start?
All right. So, like I always say when we host these things, if you guys have any questions, very simple. You can turn in your mic, jump in and ask a question. I will ask throughout the session if you have a question and you can jump in. If you want to just write them in the chat, I will read them for you. But I think most of the questions will be the ones that you have are going to be answered here, because over a large amount of realtors jumped in and answered the question. The first myth, Ruben, is only first-time home buyers can use FHA loans. Is that true?
That's the biggest myth, right? That is not true. FHA loans are not just for first-time home buyers. You can use an FHA loan multiple times. What FHA loans are for primary homes or properties. As long as the individual is going to live in the home, that is what is required in an FHA loan. So a single family home, obviously they're going to buy it, they're going to move into it. Condo, the same thing. When we talk about multifamily, they can buy multifamily up to 4 units with FHA, as long as they reside in one of the units of the multifamily property.
Okay, so then that was the first myth debunked. Those only has to be for FHA loans, and the answer is no. The second one, actually, I don't even know the answer to this one, so I'm glad you're here. You can only use FHA loans if you're a W-2 employee.
Also a myth. Not true.
Really?
Yes.
Really? Okay.
Not true. You can be self-employed as long as you qualify for the loan based on the factors that are required with FHA. And FHA's guidelines and debt to income ratios and credit scores are much more lenient than conventional. So it's actually up to a point easier to qualify for an FHA loan than it is a conventional loan, especially for a self-employed person, right? Because if they're being a little aggressive on their deductions on their taxes, on their business tax returns, they may not show all the income. So FHA does allow for a higher debt to income ratio. They also allow a low entrance to the down payment of 3.5%. And we only go down to 580 a credit score, but you can get an FHA loan as far down as 500 credit score. So it is the most flexible loan for a primary residence.
Wow. Okay. So that's two big myths right there. The first one for everybody jumped in late was FHA is only for primary homes? And the answer is no. And the second
No, yes,
question
yes,
was
it is for primary homes.
yes, all primary homes, but not first-time home buyers only.
Correct.
And then the second question was, do you need to be a W-2 employee to qualify for FHA only?
No,
The third one, Ruben, is FHA loans are for people with bad credit only.
no, absolutely not. FHA loans are for everybody as long as they're going to live in a primary. It does have a lower threshold on the credit score. So yes, somebody with credit difficulties has more of a possibility of getting approved on an FHA loan than they do on a conventional loan. But no, FHA loans are not just for people with bad credit. Absolutely not. Again, it has to do with what's best for the customer. There are many factors beyond the ones that we talk about that can affect the buyer's decision to either choose an FHA or conventional loan. There are plus and minuses on both sides. I can give you an example of somebody with a great credit score that may decide to go with an FHA loan. And that would be somebody who has great credit, let's say 800 credit score or 850 credit score, very good credit. However, their debt to income ratio is very high. In other words, they either don't show or can document enough income, or their existing debts are too high. Things like car debts or student loans or alimony, things like that can affect somebody's debt to income ratio. So because FHA is more lenient than conventional financing is on the debt to income ratio, somebody with great credit may choose to or may have to go with an FHA loan.
Okay, okay. Next question, Ruben, is another myth, and this one I know the answer, but I'll let you jump in. FHA loans are only for single family homes. FHA loans are only for single family homes.
No, FHA loans are any property between 1 to 4 units. That includes single family, like you just mentioned, it includes condominiums, and includes multifamily up to 4 units. I said condominiums, and I know that we don't see a lot of FHA loans in South Florida for condominiums. And quite simply, that's just because of the condominium itself. Getting the approval of the condominium on FHA is a little more cumbersome and difficult, but they are done. We have certain buildings that are FHA approved, not a lot, few. And then we can also do a spot approval on the condominium if necessary. These things take a little time, but they can be done with the
Okay.
right amount of effort and time.
Okay, so then it's not only for single family homes.
No.
Okay. I got two, and these are a little bit more sticky. Okay, so no, the other one is the PMI. Is the PMI something that I can remove, or is the PMI something that I gotta carry with me the rest of my FHA loan? If
For
you
the
want to
most,
first explain what
okay.
PMI is,
Okay.
so
So PMI stands for private mortgage insurance. That's an insurance that's paid by the borrower to a company. It's usually a company by the name of either MGIC or Radiant. There's a bunch of PMI companies, right? Now, that is what we talk about in general. But the reality is that since we're talking about FHA loans, it's not even called PMI. It's called MIP. Same thing for the most part, but there's two of them, okay? On the conventional side, you have a monthly PMI. On the FHA side, you have two. You have a monthly and you have an upfront MIP. So the upfront MIP is a figure that's flat and that's rolled into the mortgage. So they're not actually going to come out of pocket to pay for it. It's rolled, it's added to the mortgage amount. And the monthly is paid with your payment, including your monthly payment. That is at the current time permanent on the FHA loans. And just so you don't call me a liar, it wasn't always permanent. It became permanent, I would say maybe 15, 20 years ago, no, like more like 15 years ago. Before that, FHA loans, MIP was not permanent. It is currently permanent. There is talk trying to get that eliminated from being permanent. There are some factors, depending on down payment, that you may be able to eventually get rid of it. But as of now, for the most part, MIP is monthly is permanent.
it's permanent. Okay. So if you refi, can you refi it out or no?
You can. You just be refinancing from a FHA loan to a conventional.
Conventional. Okay, fantastic. So that was a good question. The next one is also sticky. Ernesto, I'm working with a buyer who another lender denied. Does that mean that FHA will never approve this buyer, or can I try again?
You can definitely try again. There's never say never, right? So the part that we need to realize on the situation is if the buyer is going to try to go to another lender on the same property, couple factors that play into it. Number one, the appraisal that was done by the original lender is going to be with that property. It can't be transferred, but it's not going to change. Okay. We have to, the new lender, let's say it's us, the new lender has to use that same appraisal. It's a process to get it transferred. Buyer doesn't have to pay for another appraisal, but it is a process. And as far as the underwriting, it's gonna be in the file. So the new underwriter is going to look at the old underwriter's notes and see why it was denied. Sometimes it's just a mistake. It has happened where either they weren't able to get a document in time, you know, what have you. Sometimes the loan officer makes mistakes. We have saved a lot of FHA files that have gone to lenders that just, mess it up. Well, this is a
Okay.
very, black and white process. It's a lot of human touches in this process, so there are a lot of mistakes made.
Okay. All right. Good, good, good. Okay. Next question that was submitted, and of course, everybody blames the government. I don't like to take FHA loans on my listings because they take too long because of the government. Okay, is that a myth or is
Um,
that true, Ruben?
yeah. Uh, well, I'm not going to blame. I'm going to ask you which government, right? But no,
Yeah, no, we're not talking politics, Ruben. We're not talking
no, we're not
politics
talking
here.
about that. But no, I mean that's wrong. The reality is they should not take any longer than a regular loan. If you go to a good loan officer, good company, they should be able to uh, take care of the loan up front so it runs smoothly. There is no delay. There should not be any additional time frame on an FHA loan when compared to a conventional loan.
Okay, so no, there's no government overlay. Uncle Sam is not looking at every loan that before it gets approved, and that's what it gets delayed.
Correct. Uncle Sam
Okay,
is not looking at it. So just so
okay.
you guys
I
know, as a
think I
matter of
think
fact,
they got a lot of things to look at right now. I don't think that they're
yeah,
looking at
no.
loans right
So for example, CMG is a very large company, right? So we have our own underwriters, and our underwriters, in order to underwrite for FHA, which is HUD, which is Ginnie Mae, have to be approved by them. So our underwriters are called, they're approved. It's called a DE approval, and they have that. So they're authorized to approve the loan. Nobody else has to look at it. Um, there are sometimes audits on the back end, on the front end, but those exist in both FHA and conventional, on both sides. But there should not be any reason that time should be a factor when making a decision to start with an FHA loan.
Okay. Next question is also from a listing agent, Ruben, saying, like I said, we floated this survey around different realtors from different companies, and this was the questions they had. This was another one that says, I'm a listing agent. I don't like to take FHA loans because the appraisal guidelines for FHA loans are too strict.
So that is one of the biggest myths that we've been dealing with for many, many years. So the reality is the only factor that affects an FHA loan is on the appraisal side is that the appraisal stays with it. Okay. So once it's been appraised and been logged in to the Ginnie Mae HUD site, that appraisal will stick with that property for, I believe, is 6 months. So that's the only factor. The speed of the appraisal should be the same, and the intricacies of the appraisal should be the same. There should be no difference. The only
Okay.
physical parts of the appraisal on an FHA that's required is the health and safety part of it, which is no different than a conventional. The FA used to have some very antiquated rules, and I'm talking about back in the 60s, okay, before we were born. Even me, before I was born. So that has just kind of stuck with people's mind. But again, if the property has problems with an FHA loan, it would have had the same issues on a conventional loan. There shouldn't be any difference.
So this is one of those myths. I mean, we're
Yeah,
covering myths that everybody they circulate in our ecosystem, and they become truth because they become true because everybody's just talking about them and they just become true. So I'm glad that we are having this conversation that people can ask these questions and we can all, work properly. So yes, remember, no FHA loan. Uncle Sam is not approving your loan, so the loans are not delayed. And no, there's no stricter guidelines on appraisal. So if you have a listing and you get an FHA offer, that doesn't mean that it's going to close longer or have any other issues. Next question: FHA loans have the lowest down payments out there.
They actually don't. On the standard, there's always loans, whether they're FHA or conventional, that have some down payment assistance, and I'm not going to talk about that today. On the standard FHA loan, the lowest you can come in at is 3.5%. There's actually conventional loans that you can come in with 3%. So that's another myth. They don't have a lowest. They have a low. 3.5% is very low, but regardless, it's not the lowest.
Okay, but it's still a very low,
It's very low, and the reality is it's great. It's really the more flexible underwriting, right? The HUD controls the guidelines for FHA, and they want to get people in homes. They want people to buy primary homes. That's the whole purpose of FHA, home ownership. It tends to attract first-time home buyers, but not necessarily necessarily as a requirement. So HUD wants to get people into homes, and that's how they do it. And they understand that there's got to be a product out there that makes the underwriting a little more flexible to allow people, whether it's low credit scores, low down payment, higher debt to income ratios, find a place to call home.
Okay. Next question is Ernesto. I hear that FHA loans have higher interest rates, and that's why it's difficult for buyers to qualify because the FHA, since it's a government loan, the government charges a higher interest rate. Everybody keeps going to the government. The government is not, it's their guidelines, but there's not an oversight. There's nobody looking at the loans. And I think that's a big misconception out there.
Yes.
There's guidelines, just like every lender has guidelines, but it's not so Ruben, though FHA loans come with higher interest rates.
No. Okay. There are times when they might be higher than conventional. There are times when they may be lower. So for a while now, they've actually been lower because you have to understand, and this is not a class about, mortgage-backed securities and the back office and the stuff that happens behind the scenes. But the reality is, if you think about it, these loans also get packaged, the FHA loans, as mortgage-backed securities and are sold. Okay. And when that happens, there's a risk factor. As a matter of fact, the risk factor, because the PMI, like we talked about, is permanent, is reduced. So sometimes, because that risk factor is reduced, you may have a better rate. It just depends on the market. The rates are more determined by the market than by the type of loan or by the type of individual. It's based on risk. Going back to the MIP comment, the PMI comment, Yater chimed in, and he's right that, which doesn't happen a lot, but on an FHA loan, if they put 10% down or more, they are able to get rid of the PMI after 11 years. We don't see that happening a lot because most of these loans only last, like any loan, any conventional FHA loan, typically we're seeing them either sell or refinance or cash out or whatever it may be between 5 and 7 years.
Got it. Yeah, no, I mean, the average homeowner in the US is hanging in 7 to 9 years. So,
Yeah.
Next myth, Ruben, was there are income limits for FHA, so that if the buyer makes more than the area rules, he cannot use an FHA loan.
Again, not right. They're getting two things confused in that question.
There's so much confusion out there.
Well, that's why I picked the topic. But there's what's happening there, they're mixing two things. On an FHA loan, a strict FHA loan, there is no income limits. There are none. Okay. Now, if you're going to use a down payment assistant factor or program with an FHA loan, that is what creates the income limits, the down payment assistance. But on a standard, 3.5%, 5% down, whatever FHA loan, there are no income limits. It just has to be a primary residence. That's it. And you have to qualify.
So you can have a doctor and a stockbroker both making $1 million, and they just want to buy a $600,000 home. It doesn't matter. There's no limit on
As
their
long
income.
as it's under the limit, yeah. So I'll give you a story. I did a loan for a doctor in Homestead that bought a home with an FHA loan. Let me tell you why he bought an FHA loan. Doctor made plenty of money, but he had gone through a very bad divorce, and his credit was not that high, and his debt to income ratio wasn't that high, was because of the loans. So even though he made a ton of money as a physician, his debt to income was still high, and his credit was low because he had gone through a very nasty divorce. So he lost a house in divorce, and now he was buying his own primary residence, and he bought a house in Homestead and as a primary resident, and we did an FHA loan. So there is no income limit. It's just about making sure it's for a primary. That's all you got to think about.
Okay. Next myth. Buyers that have student loans cannot get an FHA loan.
Another myth. That's not true.
Oh my God. This has been this is the I'm glad I'm recording this one because I think I'm gonna just have this on loop playing so people can listen to it.
Right. So I'm going to get this wrong. Maybe Yater can chime in here. But depending on the loan, the student loan, there is a calculation that we do to calculate the payment. So if they're paying their student loan and they qualify with the payment, that's no big deal. But if they're in deferral, we use a percentage of the loan amount to qualify them. If it's a kind of a long calculation that we do on the student loan side. But the answer to your question is no. They can definitely get a loan with their student loans as long as they qualify. Not a big deal, even if they're deferred.
Okay, so then for anybody working with a buyer out there that has an FHA loan and you have turned them, I mean, with has a student loans that you have been turning your nose up at them, give them a call. Yes, they can buy a home.
Well, Yater just chimed in that it's actually the process on the student loan is actually better with FHA than it is conventional. So like even if they're in deferral, we use less than 0.5% to determine the payment. Conventional is 1%. That's what. So it's again more flexible. FHA is more flexible. You know, I think it's been how many years has it been
I
a
think
seller's market?
FHA is a mandate to assist families buy a property, which is the doorway for generational wealth and stability. So that's, I think the government is making all of this to make sure that people can buy homes so they're more stable and they can create generational wealth.
Yeah, and it's generational wealth. And I mean, this is a statistic I heard about a couple of years ago, so it may be wrong, but home ownership or home purchases, I think they make up like 38% of GDP, based on, you know, the purchase, the renovation, the furniture, all that stuff. So they're not dumb. They want to create home ownership because it creates a lot of business for us as realtors, loan people, title, accountants, everybody. It's a big generation of activity for the country. So that's why these laws took place. I was about to ask you, how long have we been in a seller's market now, Ernesto?
We were in a seller's market since the year 2000, and
wow.
the tides are turning.
Right. So now that we're becoming less in a seller's market or more balanced market, or maybe in a buyer's market, you got to start looking at this because it's easier for a buyer to qualify as long as the property is within the FHA limits. And the FHA limits the new ones haven't come out yet. Expect them out whenever, typically early December, November. But right now, the FHA limit's pretty good. You can go up to $621,000 on a single family home, $795,000 on a duplex, $960,850 on a triplex, and $1,194,250 on a fourplex. I mean, that's not chump change there, but that's probably going to go up now in a month or so.
Yeah, that's the rumor that before the year will go up. We're running short on time, Ruben, and I think 4 or 5 more that I still want to go through. You need to wait 7 years after a bankruptcy to buy with an FHA loan.
So again, mixing up the information. No, that's another reason FHA is good. Depending on which is the bankruptcy, guys. Again, they're very detailed things with bankruptcy. You have a bankruptcy Chapter 7, you have a Chapter 11. But FHA is only 2 years after a bankruptcy. Conventional is 4 years after a bankruptcy. So no, incorrect again.
Okay. So then what, 2 years out of
Yeah, depending on how the bankruptcy went. Bankruptcy can be very, very complicated, right? Um, the reality is that on a chapter 7, it's a little cleaner and easier because there's no reorganization. So typically after chapter 7 and FHA is 2 years. There is a stipulation for a 1 year on chapter 13, but it gets sticky and complicated. Something to talk to Yater or Liamzi or Leo about when you have an opportunity.
okay, what about foreclosure? If you had a foreclosure, is it 7 years?
It's 4, again, I believe, on a foreclosure, unless it was in the bankruptcy. Again, these are questions that are we have a list that we can send, but the bankruptcy chapter 7, at least up to now, has been it kind of clears you completely. It hurts you the most, really brings down your credit score more than the 13 and some of the other stuff, but you come out much cleaner at the end. So it depends on whether the foreclosure was included in bankruptcy or not.
Okay, and last but not least, you cannot refinance an FHA loan because they have substantial government prepayment penalties.
There are no prepayment
Wow.
penalties. There are no prepayment penalties on an FHA loan. As a matter of fact, you can actually refinance an FHA loan much simpler and easier than any other kind of loan. They have a process, or we have a process called the FHA Streamline, which is super easy to do for your borrower. So, see, a lot of myths. I think we cleared up about 10 or 15. Now, I probably didn't get
No,
every.
no, actually, no. We had 17. We did
There you go.
17 of them.
Yeah, and then
We did
again, we
17 of
talked
them.
about this a few weeks ago. We had a 203K loan, which is FHA. There's a lot of products out there. There's a lot of opportunity. Again, I think we need to educate ourselves. We need to have that partnership with the LOs so that we can go through every possible situation and get people in homes they need, like we talked about yesterday on a different topic, but I think your comment was if you had I forgot how long ago, if you had bought 3 years ago, you would have about $350,000 in equity.
So if you bought in South Florida, Dade, Broward, and Palm Beach, 4 years ago, if you bought a property 4 years ago, you have an equity valuation of $360,000. So your net worth went up $360,000. If you've been renting for the past 4 years, and this is a Wall Street Journal, Ernesto Vega, you have a debt of $10,000. So you're in debt $10,000 if you've been renting for the past 4 years. And if you bought 4 years ago, you have a net positive of $360,000 in South Florida. I don't know about you, but I think I'd rather be on that side than on this side.
No question. And that's why we have to find ways to get people into these homes. The reality is all the programs are there to get them into it. Another thing about FHA loans, we can have multiple borrowers. We have something called, non-occupant co-borrowers if they need to get to the debt to income ratio qualification. So it's a great program, guys. It's really, really amazing for your primary residence. It's a great way to start. We always talk about let's get our customers into the game, into the real estate game, because once they buy, they can sell and buy another one and keep upgrading. But we have to get them in. The longer they wait, the less time they have to build equity, bottom line.
Another
Okay, so
Neto, and
see,
another is the interest rate. The interest rate in FHA is much better than the conventional right now.
yeah, interest rate, that's a lot of misconception. People were saying, the interest rates were higher and FHA, and then they're not. Well,
The last week I closed the 5.5 in FHA.
all right, there you go, people. Under 6 with the magic number, under 6, under 6. Ruben, thank you so much for, this was I mean, even for me, it was a lesson because there's a lot of misconceptions out there. I think like I said, we covered. I looked at the list, and there are many more that we didn't finish, but I think we did a lot. I think we did a lot. Ruben, best way, I'm putting in the chat your number, Leamsi's number, and Jader's number. Best way to get a hold of you.
Cell phone, like I always say, 954-661-2790. Call me, text me. I return all my calls. Please leave a message or text me if I don't pick up.
All right. And for everybody, my name is Ernesto Vega. I'm the broker here at Canvas Real Estate. If you have any questions, 954-646-5677. Make it a productive Thursday. buyers, and I think I share this with, and I'm going to say this in closing. I shared it with a couple of groups yesterday. Hold on, Ernesto. Where is so for the first time in 2 years, buyer applications, buyers reaching out and talking to lenders, right, is up substantially and has been up week over week for the past 5 weeks. Those are buyers that are going to be writing contract in 30 days or 60 days. So the buyers that you've been talking to, the lease and the property you've been talking to, are talking to lenders to go out and buy homes. What are you waiting for that you are not talking to them and calling them? Have a productive week. See you guys around.
Take care, guys. Have a great week.